Going live a couple of minutes early to give everyone a chance to join in and to make sure everything's working okay. I'll just pop the graphic up on here for a second until we actually get started. There's one person here already. If you're there, please just say hi in the comments. Just say hi. Love to know who's there, who's watching. And yeah, I'll just give it another minute. And then I'm going to start explaining something and hopefully start taking any questions that any of you might have. Damn, I should have got myself a drink before I just sat down, but never mind. So are we at 9 p.m. yet? Very nearly. Well, I'm going to start anyway. I want to start by just thanking new subscribers because this channel has really taken off in the last few days. I'll just quickly show you something while we wait for a couple of people to join. Let's get rid of that. So check this out. These are my statistics the last 48 hours. Over 10,000 video views there. In the last 60 minutes, 500 views a minute. I mean, that's absolutely nuts for me. And it's mostly down to my 8 reasons UK house prices will collapse video. Although that's a lot for YouTube, but I did a couple of trial videos on TikTok and those have gone absolutely nuts. I've had 400,000 views of my video on TikTok. But if you are a new subscriber, welcome. Thank you for subscribing. And let's get stuck in. What I'm hoping you're going to start doing is ask questions. I can see there's some people watching. So if you're there and you've got any questions, start asking away, just type away. But let me start by saying this. I have been seeing, especially in that TikTok video that's got about 500 comments now and lots of arguments happening about whether or not prices are going up. Just so many arguments about whether prices are going up or not. And people saying, well, prices are still going up in my town. And I want to start off by addressing anyone who says, well, prices are still going up in my town. Nobody knows what's happening right now at the coalface in the estate agencies between the buyers and the sellers. There's no public visibility of what's happening there at all. And that's the big problem. The land registry figures that were published most recently, I think they came out in June, were for deals that were agreed back in January when the market was arguably at its very, very top. Okay, and so the prices you're seeing reported are not what's happening now in the property market. So the most important thing to understand is this very wide time lag. It's roughly 12 months at the moment between when people start seriously thinking about moving and actually end up in a new house or with a transaction bought or sold. Okay, it's about 12 months. So no one can say what's happening right now in property prices because it's constantly changing. It's a swirling mass of different influences that affect it. And it varies regionally. It varies where you are on the price scale. And that's one of the reasons why that having a really good local agent that you can trust and that is actually competent enough to be able to give you truthful information that may not be in their interests to give you is so important, because only those guys will really know what's happening. After this, I will put in the fact, I think I can. No, I put the link in right now. Anyone that wants some real wisdom on what happens in a property market downturn should just look at the link I'm going to put in the comments right now. Okay. That's just on YouTube and Facebook, apparently. Hi, Pi May 26 evening. Yeah, there's this massive time delay. And also the prices will change. So in the course of one person's move from when they decide to buy or sell to when they agree a transaction to when the transaction is completed, those prices can change during that time. For example, house goes on at asking price. Sale is agreed at a second price. sale actually completes at a third price, it gets renegotiated. So what would you say the house prices are in that scenario? They're constantly changing. And just today, I've been advising a moving home with Charlie subscriber on renegotiating a property sale. Hey Ashley, welcome. And it's been really interesting. He's been copying me in on the communications between himself and the estate agent and the seller. And the seller has initially got very angry, and then within a few hours came back and said okay and agreed to meet him halfway, and they haven't yet finalized that. Hello Nick Jones, I work in the property industry, is not looking good at all. Now let's just, I want to just put some balance and perspective on this. We're not talking about Armageddon in the next few weeks, okay? Property prices, when you do have property price falls, roughly speaking, it's about a 3-year process. And what I'm saying is that I'm calling the top of that 3-year process. In fact, today I've agreed a bet with someone in the industry that disagrees with me that prices are going to fall 20% within the next 3 years. And whichever one of us loses has to go and sleep rough for a night in a town of the winner's choosing, and any proceeds that come from publicising that will go to a homeless charity of the winner's choosing. Christian, hi. Okay, the video's freezing. I'm sorry. At the moment, I've got good signal, it says, so I hope you can all see and hear me okay. So I want to be clear about what I'm predicting based on current economic conditions, current policies, and current forecasts of inflation, employment, recession, rents, interest rates, energy prices, first-time buyers, end of Help to Buy, and the Bank of England's ending of quantitative easing. Based on all of those, and I know we've got a change of Prime Minister coming, my estimate is that as we speak today in August 2022, existing deals that have been agreed but not yet exchanged have started to be renegotiated. I know that for a fact, right? I know I'm getting stories from all over the country of that happening for a fact, okay? I'm also hearing stories of people having to pay over asking price to secure a property. And I understand why that's happening, and I'll come on to that in a minute. I must make a note so I don't forget. Over asking price. I want to come back to that. It's really important. Okay. And so I can see why some people think prices are still going up. But are you talking about today's asking prices? Because that's one house price set of data. Are you talking about the prices at which deals are agreed? Because there's no official data for that. Okay. There's no official data for that. In my estate agency software packages that agents use, I can see what prices are being agreed. And that's why I've got some insight behind the scenes in the industry. But then there are also what were the prices that actually completed at? And then there's when did they get reported, which is even later. So anyone who says prices are going up where I am, well, be specific. What do you mean? Yes, so Primate, asking prices are still high, but Rightmove has reported an average reduction in asking prices of £4,750 or something in July in its most recent report anyway. So it's trying to pass that off as, oh, it's just the summer thing. I'm sorry, I completely disagree with that. That is the beginning of asking prices being reduced because they are high. Why are asking prices so high? Because the market has been artificially pushed up by the measures the government put in place at the beginning of the pandemic. That is why. And if you read the article that I've linked to, if you haven't seen the link for that, it's on the Best Agent blog, bestagent.co.uk/blog. Go there and you find it. That explains the difference in timing of the market, right? Now, the other thing is people keep on saying, oh, but supply and demand. Demand is still high and supply is still low. Fact, transaction volumes are marginally higher than the long-term average at the moment, okay? So there is enough supply to meet normal housing transaction volumes. It's happening, okay? So there is a perception of less choice. Is there less choice? Yes. Are there lots of people wanting to move? Yes. But are there more people moving than normal? Slightly, actually, yes. But the supply and demand has, each one of those two things has got multiple factors affecting it. And it's not like this is the supply, this is the demand, okay? They're both constantly moving things with 3 or 4 different factors affecting them. It's not that straightforward. And even if people want to buy, and you could call that demand, and estate agents are registering lots of buyer interest, we're seeing lots of interest, we're seeing lots of demand, that doesn't mean they're going to get a mortgage and buy it. And right now, what I'm hearing from mortgage brokers is, well, the exact quote I think I put on Twitter, someone commented and said, I'm a mortgage broker, 99% of people have no idea what's coming, right? That's a mortgage broker with a real name, not some anonymous account, saying that 99% of people just don't know what's coming, okay? So you can have 1,000 buyers who all want to buy a property at £250,000, and if yesterday the lending was there for that, but tomorrow it's reduced, the demand hasn't changed, but the financing of that demand has changed, and that has a downward effect on prices, even when the demand hasn't changed. So it's not straightforward supply and demand, okay? It's much more complicated than that. Now, I want to talk about people saying, oh, but people are still paying over asking price in my town. I believe you. I totally believe you, because there are most people out there think the property market is still going up, okay? Because the official figures show that prices for June are whatever 9% up year on year. Well, that's 9% up compared to last June. What are they up compared to May? And they don't talk about that. And don't forget, most people that publish house price data have a vested interest in keeping the market going. And one of the things that stops the market going is talk of house prices falling, because buyers understandably go, whoa, let's maybe just put a break on here for a second. Now, I'm not saying that people should stop buying. I'm saying that you're going to be much more careful about whether you buy or not, okay? And by the way, for people who are paying over asking price now, there are scenarios where that still makes sense. If it is a very rare, very desirable property, and there are well-funded buyers competing for it who don't care that there's going to be a property downturn, then yeah, those properties may well be going for over asking price. That always happens, right? Rare, desirable properties with competing buyers who don't care about mortgage payments because it's a cash purchase or something may often just go ahead and pay over the price, because rare and desirable properties will always get a premium, and very skillful agents will always get competing buyers, because that is the only way you can be sure you've achieved the maximum price for selling a property. Now, what I will say is this: people agreeing prices at over asking price, people agreeing purchases or sales at above asking price today are very likely to see those renegotiated. If we're talking about the regular housing market at around about the £300,000 level, right? That's where you're going to see people who've paid over asking price by the time the deal exchanges, and roughly at the moment, that's a 5-month wait. So if you've just agreed a sale on your property at or above asking price and they're thinking, oh, lovely, money in the bank, I would caution against that. Maybe you will get it through at that price, and congratulations if you do, but I would be prepared for what the media is going to be saying in the coming months to see your buyers at the very least renegotiate or pull out. That is already happening, everybody. Now, this is the other thing. There's no one-size-fits-all description for what's happening in the property market, because there is no the property market. There are hundreds of micro markets around the country, and they're all slightly different, okay? Which is why everyone says, oh, well, where I live, this is happening. Oh, where I live, that's happening. So you just got to understand that making sweeping statements is not a good idea. However, I'm guilty of making a sweeping statement. And my sweeping statement is that overall funding for buying properties is getting weaker, all right? Also, switched on consumers who are really looking ahead and worrying about energy prices are going to be budgeting forwards and going, holy shit, our disposable income is going to be wiped out by energy prices. Okay, tomorrow, Friday the 20, whatever it's going to be of August, the government's the new price caps are being announced, and I think very few people have got a really good grasp of what reality is going to be like this winter, and especially in the new year. It's going to be horrible and grim for most people, and even reasonably well-off people living in reasonably big houses are going to be impacted by this, okay? Because the energy bills in bigger, older houses are going to be horrific. You're talking about thousands of pounds per month for those big properties. And even wealthy people living in those houses are going to get hit by that. In fact, I had a seller contact me saying he's living in an almost £2 million house that he bought at the beginning of the pandemic, and he loves it. And because it's a big and quite an old house, it's just not very airtight, so the wind just goes right through it. And he said even last winter the energy bills were horrific, and he said he's now looking at selling because he literally can't face what the energy bills are going to look like. And this is in a £2 million house, right? There are very few people going to be unaffected by this. So now, I'm not advising that anyone should renegotiate your offer or not. Let me explain when you should and when you shouldn't renegotiate your offer if you're a buyer. If you have secured a home and you are in love with that home, like you've really fallen in love with that property, you've got an agreed deal, and you're confident that you can keep up your repayments on it for at least 5 years, and being in that home is more important than finances, don't try and renegotiate. Get in that property, because don't lose your dream property because you renegotiate. Because what happens a lot, understandably, is sellers get very angry when buyers renegotiate. Some they just go, sorry, fuck you. I'm just not going to sell my house to you anymore. I've actually changed my mind. I don't want to sell it now. So do not risk losing the house of your dreams by trying to save a few £1,000. That is a false economy that you will regret. All right. So if you currently have an offer agreed to purchase a property, then you're in love with that property and you really want to get in there, just don't risk derailing that deal by trying to renegotiate. Okay? Because you cannot renegotiate the purchase of a property without risking the deal collapsing. Okay? You should never even consider renegotiating a purchase of a property unless you're prepared to accept the seller going, right, I'm not selling it to you. All right? That's a very, very clear warning. Now, having said that, don't overpay either. If it's a property where, and I know some of my advice kind of contradicts, and this is where personal judgment calls are required. Okay, this is why the property market is so complicated, because it's just, there's so many different factors affecting it, and it's so personal. And sometimes it's not about the money; it's about your feelings. Like, do I want to be in that house enough or not? And how am I going to feel if it falls through? And how am I going to? It's all about feelings and emotions and feeling safe about where you live and having someone for your family to grow and that kind of stuff. And none of those things are financial things, right? Too many people get hung up about just the money side of property, and it's a mistake. And one of the estate agents I've known the longest of all, who's been an agent for a really successful agent, says, no matter how much he tries to tell buyers this, they never learn. They fall in love with their dream property and they make an offer, but they don't offer asking price. And then the seller says, no, I'll sell it to someone else. And they're like, oh, actually, we would have paid asking price. We were just trying to save a few £1,000. Now we've lost our dream home. That's the most common mistake buyers make, right? Now, that conflicts with me saying, don't overpay. Now, whether or not you're overpaying on your price depends on what's happening in your micro market. So, Laura Jane, hi, you're saying that in Oxford there are sealed bids, but that's at the property's priced at like £1.5 million. Okay, see what I mean? That is a level of the market which is very, very different dynamics, different levels of finance, totally different dynamics at the market of £1.5 million. Okay, but still people with mortgages, still people with bills to pay and school fees to pay probably, so they're also going to be affected by it. But when those properties get affected is later, because it's the first time buyers that are the foundation of the property market. And without healthy first time buyers purchasing properties at strong prices, you don't have a property market, right? It's like pulling the rug out from underneath it and it all comes tumbling down, not overnight. Okay. I know a lot of people are thinking is, okay, when's it going to happen? When's the price going to happen? No, there's a tipping point, okay? And no one knows exactly where that tipping point is going to be. If I had to guess at the moment and predict when I think that tipping point is going to happen, I would say the tipping point is going to happen February, March, April next year. All right, that's when I think the tipping point will happen. When the January price caps increase have come in again, And those people who've been holding on thinking, we can still afford to buy, we can still afford to buy, we can still afford to buy, are going to go, you know what, we can't. And the buyers around about then are going to just stop buying. And the sellers who've been trying to get as much as they can for the property, selling it, but they're actually chasing the market down, are suddenly going to see the market suddenly go like that. And if you've got the selling prices, so offer prices and bid prices, in a normal market, they're kind of close together, right? What happens in a downturn is that the bid prices drop much faster. And then you have a period when the sellers are chasing the buyers down. And that's a horrible place to be for sellers, okay? And then it levels out again at the bottom. That period takes, it's roughly 3 years, okay? You've got a year of gentle price falls, then you reach the tipping point and the bottom falls out of the market, and there's this horrible period, and then they level off, and that's when you've got a really quiet, stagnant property market because no one's got any money to buy because it's in a recession. Now, there's still people debating whether we're going to be in a recession or not. Stuart Brown, your question about Scotland is a good question. I honestly don't have the information to answer that. I can't answer that. Any other good questions I can see? Yeah, interest rates, 5 or 6% is probably going to be the market rate, says Nick Jones. Do I think interest rates will go down when the recession hits? Okay, that's a good question. No, I don't think interest rates will go down when the recession hits until inflation is under control. Okay. I'm 65, 70% confident of that. Okay. Interest rates, because a recession is more survivable than high rampant inflation. Okay. So they will have to prioritize bringing inflation down before they can take steps to stimulate growth. Okay. In my personal view, a recession is now inevitable. One of the things that the media has not been talking about, but I've already heard people talking about, is small businesses with physical premises like restaurants and bars and places like that, whose energy bills are going to be going from £20,000 a year to £100,000 a year, and it's going to put them out of business, and all of the jobs are going to be lost. And so, although people think the jobs market's quite good at the moment, it is. I don't think it's going to be. I don't think people have fully factored in the effect of these energy price rises on the on working people who make up the majority of this country. I don't think anyone has really got a good handle on just how bleak that's going to be. I hope it's not. And if I'm wrong, nobody will be happier than me. I will be so happy to be wrong about this. Nick Jones asks, what's my background? Expelled from school, did 3 years in the city instead of going to university, where I got my Securities and Futures Authority, and I worked in a large broking house and got my training on how the financial markets work. It was amazing to get in that training. And then I got fired from that job, which was the last time I was ever actually employed, and that was a long time ago, nearly 30 years ago. And I have worked in the property market in tech. I provided tech to estate agents, tech and marketing services to estate agents for the last 20 or 25 years. I was a judge at the Sunday Times Agent of the Year Awards for 2010, 2011, until I realized that wasn't actually a fair contest. And I've had hundreds and hundreds of estate agency companies as my clients, ranging from all the big national brands that you've heard of down to lots of one-man bands that you've never heard of. And I have a really good understanding of how estate agents work, but I've never been one. So my background is I've got lots of contacts in estate agency and that whole moving industry. But my positioning on this is that I want to improve moving, not only for movers, but also for the good agents out there as well. So I hope that answers that question. N Soul, thank you very much. That is a very nice feedback. Let me see, any more questions? Is this going to be, AJ says, is this going to be like 1988 to 1996? Yes, I think it's going to be worse. And the reasons for that get into international banking and banking regulation and that kind of stuff. So I think it's going to be worse. I think it's going to be more like the 1930s. I think it could be. Now, big caveat. If the government decides to treat the coming recession with the same approach as they treated the pandemic and decides to pull out emergency funding out of their bums somehow to keep everything afloat, that could change things. That could change things. And the other thing that could change things, and I ask you again, read the article I put a link to at the beginning of the live stream from John Durrant, which is on bestagent.co.uk/blog. It's the most recent blog. Read what he says about the 1970s recession and property market downturn and the 90s one as well. It's really worth knowing what can happen. And if there's anybody here, I had someone today send me a question. I've had so many questions, by the way, guys. Thank you for your questions on Instagram and on Twitter and on Facebook. I've had private messages, loads and loads of questions. And I'm sorry for those of you who haven't answered. There's just like hundreds on TikTok I haven't even had a chance to get to. But someone said to me, if they had a question about negative equity, and the question was, if your house value drops below the value of your mortgage, but you keep up, does anything happen? If you keep up your payments? The answer is no. The lender does not care what happens to the value of your property as long as you keep up the repayments on it. So as long as you can keep up the repayments on your mortgage and you're sure that you can do that no matter what, and you're sure that there's no chance of losing your job, then you will, as long as you can do it long enough until the property market comes back up again, which could be 10 years, you'll be okay. You're not at risk of losing your home. But I've got a really awful story about someone, about what negative equity did. But no, the banks cannot touch you if you're paying your mortgage, right? But when people get caught out is when you get the perfect storm of discounted fixed rate period comes to an end, actual interest rates are horribly high, so suddenly your mortgage payment goes up, and if you're an interest-only mortgage, it can double, right? And inflation has gone up, so your costs have gone up, and energy, and maybe you lose your job, and you just can't afford your mortgage payments. That's when it goes really, really bad, all right? And last time in the 90s, the banks were brutal, and they just repossessed everything. And something like 2/3 of the properties on the market in the estate agents' windows were repossessions. It was a bloodbath. And people who don't remember that and who've only ever experienced the last sort of 20 years. I mean, the financial downturn, the credit crunch in 2008, 2009, there were hardly any repossessions. I mean, it was frankly a walk in the park compared to the one in the 90s. So let's have a look at some more questions. No, Nick, you're very welcome to ask questions. Anyone can ask whatever you like. I may not answer, but you can ask whatever you like. Krisha, you're asking me specifics about specific areas. I cannot possibly give precise commentary on boroughs of cities of price rises. You've got to get a feel for that yourself. But you know, £700,000 to £800,000 in London is kind of towards the lower end of the London market. So it's the most at risk of being affected by a downturn. Okay. However, having said that, London prices did not go up as high during the pandemic as the rest of the country, and therefore London prices may not be as badly affected as they were in the 90s. For anyone that doesn't know, in the 1990s recession, the property price drop for London and the Southeast was 27%, and the rest of the country was 13%, right? So that's what happened last time there was a proper price crash. Oh, Dr. Chris 24. What do you think the minimum deposit is that you should be putting on a house? I.e., what should you be aiming for to be safe from negative equity? The straight answer to that question is probably 30%, 35%. Okay, if you can, that's what I would do. But remember, I'm not saying that you shouldn't buy if you've got a 90% mortgage or Help to Buy, whatever, as long as you're sure you can. I mean, you've got to accept the following outcomes, right? If you're buying at the top of the market, you've got to accept the possibility that if everything goes pear-shaped, interest rates go up prices come down, there's negative equity, and for whatever reason, even beyond your control, you can't keep up your mortgage payments, you will lose the property. Now, that might be a risk you're willing to take. And if you go ahead with the property purchase having accepted that risk and it happens, well, you'll be okay. It'll be a bummer, but you'll be okay. What's not okay is when you haven't considered that possibility, and then when it happens, it blindsides you, and you've got a young family in there, and you've lost your job, and it's a life ruiner for the people who don't see it coming. Absolute life ruiner. Adrian W, thank you very much for the feedback. Okay, someone said we waited 6 months before we repossessed. Well, AJ, I mean, it's not long, is it? In a 3 or 4 year downturn, 6 months is not long enough for people to get their. If you've been knocked down, you've had a big fist face, were knocked down by negative equity, and you can't keep up your mortgage. 6 months isn't long enough for people to get back on their feet. I actually think if the banks had waited more like a year, then a lot of people wouldn't have lost their homes, and the market would have recovered faster because there'd have been less on the market. Yeah, energy prices are going up so fast they're becoming a second mortgage payment. Absolutely right. I have 100. Ryan, hello mate. I've got 165k deposit and I can borrow 150. And I'm a first-time buyer. Would you recommend waiting? I'm seeing a lot of prices reduced. I personally feel to wait. I live in Kent. Ryan, that's one of the most frequent questions I'm getting. Glad you asked it. I've even made notes on exactly how to answer that question. So you're in a position to buy safely, and you're wondering whether to buy or not. If you want to buy it to live in it as a home, and you can afford to, and with a more than 50% deposit, Ryan, you are not at much risk at all of negative equity. If you're a first-time buyer as a home, yes, with figures like that, crack on. Just go make offers, don't overpay, get on and get into the home. If you're talking about doing it as an investment, no, I'd wait. Okay. So if you here, first-time buyer, should I move now or wait if you've got finance in place? If you say yes to all of these, the answer is yes, proceed now, despite everything. And is your desire to be in a home urgent? Is there a pressing need? For example, you really aren't happy where you're living now, or something like that. If that's a yes, do you feel secure you're going to be able to keep up the mortgage payments for 5 years, or are you prepared to accept the possibility of negative equity? If the answer is yes, great. That's 2. Have you found your dream home, a property you've fallen in love with and you just can't imagine living anywhere else? Yes, great. And have you considered the worst case scenario? Yes. If all 4 of those are yes, crack on now. Just go in and move, because you'll be okay. You'll see it out, okay? Don't not buy if the answer to those questions is yes. But if the answer to any of those questions is no, right? Your need to buy a place isn't urgent. You're not that comfortable about your mortgage affordability, perhaps, or you like the house but it's not your dream home, or you haven't considered the worst case scenario, then no, don't buy now. And what I would say that you do, though, is keep looking. Okay, if you're a first-time buyer who'd like to buy now, but you're umming and ahhing, get out there and look and see what's happening in your local market, because you'll get a real feel for it. You'll start to see what's selling and what's not, what's being reduced, what's hanging around, what's coming back on the market. You will develop your own really good finger on the pulse of what your local property market is like. So if you're a first-time buyer, not in a hurry, go out and be looking. As long as don't waste agents' time. Please, everybody, don't waste. They're human beings making a living, and they don't get paid if they're having their time wasted, all right? And everyone thinks it's okay to waste their time because they're just estate agents. So they're human beings, and you shouldn't waste anyone's time. Don't go out knowingly wasting agents' time, okay? So, but if you are considering buying, then of course go out and view. Go out and view. Talk to the agents. Get to know your market, all right? Especially if you're going to live there. Because the more you look around an area thinking about living before you buy, the better your final purchase decision will be. Lucy Barnes says, hi Charlie, is it worth renting for 6 to 12 months to keep an eye on the market? House deposit is ready. We are hesitant about buying now. Absolutely, Lucy. If you're hesitant about buying now, I would rent. Absolutely right. Yep, that's what I would be doing. That explanation I just gave now applies to you perfectly. You know, you've got the finances. Your need isn't urgent if you can rent. I'm assuming that you're where you're living now. You're not in a high pressure need to move somewhere. You haven't found a home yet, anyway, and you're hesitant because of the worst case scenario. So that's a hard no. Don't buy now. Rent. Are property crashes good? You could argue that it's more affordable. Okay, it's always good for somebody, right? There's when things go up, some people win, some people lose. When things go down, some people win. There's always people on both sides of a transaction, aren't there? Both sides of an asset price move. So, rising property prices have been very good for a lot of people and very good for the economy, and it's improved people's lives. But rising property prices have also priced a lot of people out of home ownership. So there's no blanket yes or no, it's good or bad, right? We could get into a debate about government policy on housing since the 80s, and I can see all arguments. Okay, I really can. Can you offer 6 to 12 months rent upfront for a discount? Yes, you can. I don't know. Landlords may or may not take it because they probably just want the high yield over the year. They might take a discount. I don't know if I would, though. I don't know. You just never know. You might hate living there and want to get out. Just be careful when you move into anywhere, renting or buying. You don't know until you're living there whether you're going to like it or not. And lots of people buy or rent places that they then find out that they hate. We have a neighbour right here, and that is exactly the case. So, who's better to write it down to the market as a real estate agent? Mark, great, Mark. Okay, Mark, that is a great question for the Best Agent channel, and I will bring that question to the next Best Agent live stream, and I'll answer it there. This is a live stream for movers, okay? So hope that's okay. But thank you. I'm glad you're watching. Welcome. After watching some of your vids, I subbed. Why? Because you sound very honest. Thank you very much, Bob James. I don't see any point. It's wasting my own time as much as anyone else's to not be honest, and I just want to help people here. Ashley, currently buying in through co-ownership in Northern Ireland. I have an 18% deposit, 68k mortgage for 55% share. How does negative equity present in a co-owned situation? Ashley, I don't know the answer to that question. I'm afraid I cannot offer you any advice on that. I don't know the answer to that question. The person to ask that question is the mortgage advisor. Okay. But I hope you can get in because that's a great foot onto the housing ladder. It's nice to keep you there if you can make it. First time buyer for living in. Great. So not for do I recommend making a lifetime ISA? AG, I'm afraid I can't answer that either. I'm not an expert on investment vehicles and ISAs and that kind of stuff. It's all about the moving for me, the finding the home, the moving in, moving out, how to deal with agents, that kind of stuff. So I'm not a financial advisor, and I would recommend going to someone like the Money Expert website. I can't remember his name, Martin Lewis. Look for that guy. You're welcome, Ashley. Any more questions? Has anyone asked a question I haven't answered? It's disappeared up the scrolling. Please, if you're waiting for me to answer your question, just type it again, will you, at the bottom? Couple of properties, flats, otherwise, how long have we been going? Oh my god, 40 minutes. That's long. If there are no other questions, I'm going to wrap that. I've got to get up early, so I want to get to bed. Really appreciate you all coming. Thank you very much. If you have found the Moving Home with Charlie channel useful, please share it with your friends. Not only does it help me with what I'm trying to do, which is the Best Agent website, I'm going to be promoting that as a major difference in a way to find properties and find estate agents, but you'll be helping other people if you think they'll benefit from my advice. AJ, one more question. What would you recommend to first-time buyers to mitigate risk of buying at the top? That's an excellent question. Let's wrap it up with that one. I'll answer that one, then we'll wrap it up. How to mitigate the risk of buying at the top. It comes down, obviously, the risk is inherent in the price. The price and then your affordability. So the risk of you losing your job, and that's a personal difference to everybody. So the best thing to do is to find a property that no one else is offering on and get it at a good price. That takes longer to achieve. You've got to look harder. But if you are looking harder and the market's starting to turn, you'll be the best placed. What people tend, how do you get a great deal on a property? Sellers are more likely to accept a cheeky offer or a lower offer if the chances of your offer completing have high certainty. So if you're ready to move very quickly, I've got my deposit lined up, I've got my mortgage lined up, I've got my solicitor lined up, I'm ready to exchange, I'm unencumbered, there's nothing to sell. If you're a first time buyer, obviously nothing to sell. So if you make sure that your ducks are really in a row and you've done all the money laundering regulations with the agent, and the agent can say to the seller, these buyers can proceed immediately. Get yourself into that position, and then when you find the property, and you'll have to look at lots to find one, you find the property that you like and think there might be a chance to get it. That's the best way to mitigate your risks as a first-time buyer. Thank you, guys. This is great fun, and it's wonderful. I can't believe there's 54 people according to this, which if not more. In fact, I know it's more. That's just on YouTube, 54 people. Okay, and we're out on LinkedIn as well, and on Facebook and on Twitter. So who knows? Maybe over 100 people. I'm flattered. I'm honoured that you give me your time. I appreciate your time. Appreciate your support, and keep sending your questions in. I've got more videos coming out. Thanks, guys. Have a good one. Best of luck and good night. See ya.